The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Friday morning, 8:30 a.m., 60 minutes to go until that opening bell. And right now, we got a little bit of a mixed market. The market clawing back the losses last night. The market had when we found out the news that Secretary of the Treasury and the Fed chairman, they're not on the same page. Secretary of the Treasury Mnuchin pulling some of the programs available to the Fed. The market finding out, trading from 35.80. We start last night, you accelerate all the way into the close, 35.45, and you see the slow climb back up to the exact level. S&P's right now technically minus 5 points at 35.75. Jumping around, we got the NASDAQ up 7 points at 11,995. You see the sell-off in the NASDAQ. Dow negative 53 points, 29,390. Russell off 5 points as well, 1778. Commodities, crude up 18 cents, above $42 at 42.08. We've got Bitcoin, had made the high of 18,540 on Wednesday before a little sell-off. We were right back up to that level, making a high of 18,500 on the dot at 2 in the morning. Bitcoin above 18,000. Gold contract up $5 at 18.66. Silver up 23 cents at 24.28. Notes and bonds, a little bit of higher price and lower yield, the continuing trend. We get the 10-year up about 4 ticks right now at 138.15, and you're looking at a 10-year yield of 0.837%. Over in Europe, we get the DAX up 0.4, FTSE up 0.4 as well. Asia, Nikkei down 0.4, Shanghai up 0.4 all around. Jumping over to the VIX, taking a look at everything we got going on as this market rebounds from the sell-off. We spiked to 2340 last night. We make it to 2270 right now on the volatility index. All right, jumping around to some of the headlines. We'll start off with that story. Mnuchin Powell split shows rare discord as economy struggles. I mean, not the timing that you probably want to see as you have the top two U.S. economic policymakers clashing over whether to preserve emergency lending programs designed to shore up the economy. Disagreement erupted late Thursday. Outgoing Treasury Secretary Mnuchin released a letter to Fed Chairman Jerome Powell demanding the return of money the government provides to central banks so it can lend to certain markets in times of stress. Minutes later, the Fed issued a statement urging the full suite of measures be maintained into 2021. Chairman Powell, he's been on record saying the risk is not doing too much. The risk is doing too little to this economy. In terms of what they're talking about, we have 4 of the programs. Mnuchin is allowing an additional 90 days. Requested expiration, you're talking about primary market corporate credit facility, secondary market, municipal liquidity, Main Street lending program, and term asset-backed security loan facility. Nonetheless, we got yesterday at this time, we had continuing claims ticking up for the first time in 5 or 6 weeks. We have cases spiking. We're still 10 million people off of the rolls for employment from prior to COVID. Tough times, but Mnuchin said the purpose of this announcement not to put the Treasury against the Fed, merely carrying out the law prescribed by the CARES Act. And it appears the Fed may be reading the legislations differently, to say the least. And then more vaccine news. So Pfizer, BioNTech, they're going to plan to file today to use the vaccine in December. The highest risk would be the ones that receive that first. 95% effectiveness. Filing with the FDA could permit the vaccine to be administered to high-risk populations in the U.S. by the middle to the end of December, companies said in a statement. So you're talking about a month to maybe 5-6 weeks before it even gets to the highest of risk, whether it's nursing homes, first-line responders working at hospitals, etc. Nonetheless, good news as much as time marches on and the vaccine marches on. All right, jumping around to what else we have going on. I found this article interesting this morning. I do not trade cocoa, but Hershey's, they're behind the big cocoa trade that upended the New York market. So one of America's top chocolate makers upended the market, taking the unusual step of directly sourcing a large amount of cocoa through the ICE Futures U.S. exchange instead of buying beans in the physical market, which is usually how it gets done. The massive trade sent the December delivery futures to a record premium over the next contract, which I believe is March. The purchases were so large that they required special permission from the exchange. It gets into it more than this. If you're trading more than 10,000 contracts, they want to make sure that you are not just a speculator and that you actually have a purpose, a business purpose, which Hershey does. So they're allowed to do that. The trade comes after top cocoa growers in the Ivory Coast and Ghana. They get into this. Ivory Coast and Ghana, 70% of the chocolate or the cocoa comes from those two areas alone. So you have premiums put on there. Most of cocoa changes hands via private deals around the world. The purchase through the exchange allows Hershey to obtain cheap supplies, saving millions in the process. That's because beans sourced from the exchange stockpiles don't incur the premium. Currently about 15% of the futures price, just a 15% savings for going to the futures market as opposed to going directly to Ghana, Ivory Coast, where they're going to charge that premium. Hershey says it doesn't discuss these details, so this is just coming out in the news. Pennsylvania-based company says it has long supported initiatives to improve farmer livelihood that include those living income differential. The 400 a ton premium is known, so they support it. They're just going to the futures market to save money as opposed to paying that. Chocolate makers usually use cocoa traders and processors as intermediaries when buying beans. They also don't process their own cocoa, so sometimes they're just buying already bound cocoa butter, which accounts for 20% of milk chocolate. And here you go. They account for 70% of the global cocoa production. Ivory Coast and Ghana started charging the premiums this year, and that's what sent that market crazy. And here it is. Exchange deliveries have reached more than 30,000 metric tons of cocoa, either through normal delivery process or alternative settlement mechanisms. They allow each partner, buyer or seller, to negotiate in private if possible. The trade sent December futures, the first to expire after the implementation of those premiums, to more than 250 metric ton over the March contract. Any position above 10,000 requires a so-called hedge exemption in which the buyer has to prove it has a commercial use for the supplies. So only a company like Hershey could come into this market. But when you're trading cocoa, you better be aware of some of the risks out there. And so interesting, nonetheless, how that market is moving in a big way. All right, what else we got going on? Jumping around to some of the stocks. We talked about Pfizer, BioNTech. Still earnings season. Foot Locker is out with their numbers. Strong numbers, $1.21 a share. Market was only looking for 63 cents. Revenue beat estimates as well. Same-store sales, 7.7%. Remarkable, right? Look at this. Surveyed by Fact. How about comp store sales dropping by 1.2? Market thought they were going to drop by 1.2. They rose by 7.7. Yeah, you'd guess that they'd be up. But in this market, you're just not sure because of everything else going on. But from 41 to 42.55, it's muted some of those gains for sure. Foot Locker putting it on a daily. I mean, we're right back up, basically. You're going to open at 42.33 right now, going back a full year, putting this even further back, a 5-year weekly. I mean, that's a downtrend, but we're back to pre-COVID levels right now at 42.33, and you've got same-store sales growing at 7.7% as opposed to dropping 1.2%. All right, we'll get into all these companies. We got Hibbett's, we got Workday. Ross Stores is out with their numbers this morning. We got a lot of equities moving today. S&P's minus by 4 points right now. There's your 5-year, 3-year weekly. Quite the rebound that we've had in the S&Ps this morning, trading at 35.75. Stay tuned, folks. We'll be right back to go over those equities.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. S&P's minus by 6 points. We get the NASDAQ hanging on to gains, positive by less than a point right now. Dow off 66, Russell off about 4. 4. But you can see well off the lows we had last night, the lows in that S&P. You're talking about almost 30 points below where we were at in a flash from the end of the trading day yesterday to 35.45, which is right where we were at 9 in the morning as well yesterday. Be an interesting open, right back up to where we are. We got about 45 minutes until that open. We'll see where we end up as the NASDAQ right now, just teetering on going negative. Okay, jumping back into some of these equities with earnings. Hibbett Sports, they're out with their numbers. Another retailer, huge week of retail earnings, right? $1.47 a share. Market was only looking for 45. Look at these numbers. I mean, these stocks in any other world just should be crushing it. A lot of the expectations probably not living up to what these companies were able to do, even in a COVID-restricted economy. Revenue exceeded forecast. Same-store sales increasing 21%. Analysts were looking for 7.5%. Shares gained 7%. I imagine $1.47 a share and same-store sales of 21%. People buying all their sporting goods to play in the backyard with their kids or with their friends, whatever it be. 42.13 to 46. This stock putting it on a daily. Yeah, talk about a rocket ship from 7 to 56. Come into earnings at 42, and we're going to pop a bid up to about $46 on the open on Hibbett. All right, jumping around, Workday, next big one out there. Quarterly earnings, 86 cents a share. This one had some volatility. Wait till you see this chart. 19 cents above estimates for earnings. Revenue topped as well. Their human resource and finance-focused cloud software raised subscription revenue outlook. Always good to hear a raise in outlook, right? Not what you did for me last month. What are you going to do for me in the next few months or years? But also issued warnings about the lingering impact of the pandemic on its results, and actually in negative territory. But check out this pop we got on Workday. There you go. So they get the numbers, they get the fact that they beat in a big way, right? And then they find out probably that the pandemic is going to continue to weigh on them. The conference call began at 4:30. Lots of times, you know, this conference call can reveal a lot about the business that maybe the initial numbers do not, and that's the case here as you fall off from 242. We're down about $20 from where you were sitting after those numbers to 223. Still, some context. We're above pre-COVID levels of 200. You were all the way down at 107 for Workday on their numbers last night. Okay, Eli Lilly. So they're going for authorization from the FDA for combining its arthritis drug with Gilead's remdesivir to treat COVID-19 patients. So there's so many headlines out here. I almost hesitate to even go over this one. And then you have the WHO recommending against the use of remdesivir to treat the virus. Now, I read this one this morning. You know, it's not like they've proved it does not work, right? What they're saying is they don't have the evidence to say it works in any manner. And so take that for what you may, but that is out there this morning. FireEye, they're going to receive strategic investment from private equity Blackstone. The firms will purchase $400 million in convertible preferred stock, convertible at $18 a share. FireEye closed at $14.24 on Thursday. How about that, right? $400 million, convertible preferred stock at $18. You're trading at $14.24. FEYE is FireEye. And check out that pop. So what did I just say the price was? $18, right? Yeah, look at this. $17.20 in a heartbeat from 14. Quite the pop as they peg that price to 16 right now on the open. You're still going to open about 10% positive for FireEye shares. Disney, they're mulling a move to debut of more films from theaters to Disney Plus, according to a report. Firms are said to include Pinocchio, Peter Pan, and Cruella. Interesting. If you follow the program, if you get the newsletter, you know I'm a big Disney bull, been reacting pretty well. I mean, pulling back some from a pretty stark run here. You got from just under starting basically the month of November at 120. You're up at 140. You were hovering in the 110s for a while. Disney, they're making the shift to direct-to-consumer, but they will be sacrificing a tremendous amount of revenue if they stop going to the box office. I imagine that's not the case. They're just making do in the time being of where they are. Because I believe they had, going back to 2019, right? I think it was 10 or 11 films that all grossed $1 billion, something like that. They had $11 billion plus in box office grossing numbers that you're talking about. And then you still get to bring all of those movies then to the Disney Plus streaming platform, right? A much more profitable business model that they will probably go back to. But there's such a buildup of films here going on as this COVID restrictions stretches on. We're talking about a year to a year and a half of films piling up. When the movie theater business, they push these films out. They have a calendar that is 1, 2, 3 years in advance. They already know what films are coming out Christmas year. You know, the big holiday blockbuster movies are already there. So it's not like you can just fill the void and fill them back, because there's so many films already on the back end that are planned to come out in 2021. So for the time being, Disney, they're pushing that out. But as you see, Disney pairing some of the gains it's had since the vaccine news has come out. Intuit, out with their numbers as well. I mean, it's just a constant beat here on all these companies. 94 cents, tripling the estimate of 37. The TurboTax maker came in above forecast for revenue. Said its results got a boost from an increase in sales for both small business and consumer offerings. Intuit, INTU is their symbol. Now, there's an acceleration. We're going to open basically flat this morning. You'll see the chart in a moment. From 187 to 361, you put it on a 5-minute, and we had some volatility right out of the gate. But, you know, you're a $360 stock, and you barely went to 366, down to 357. And right now, you get a bid-ask that's straddling the close last night of 361.44. All right, let's jump around to some of the tech stocks, see how they're reacting. With the NASDAQ up 2 points right now coming into Friday, trading 212.66 for Microsoft, up a hair, as you see. Amazon shares, their big acceleration Tuesday, getting into the prescription med business, up to 32.20. Just kind of falling back. We're right back to where we were before they even announced that. Jumping around to some of those big prescription companies continuing to slide, right? CVS down to 66 from about 74 before that news. Walgreens Boots down from about 44 to 38. Tesla shares, quite a week for Tesla. All-time highs yesterday to 508.61. You started the week at about 400. Not bad when you get a 25% pop in your market cap added to the S&P for Tesla shares. And I'm going to jump over. Interesting story. We talked about it on the program yesterday at 10 o'clock, I believe. Tom pulled it up. Yeah, probably, because look at it. It was yesterday at 10:17 a.m. For those out there that don't know, played a decent amount of poker in my time, online especially, as well as in person. But I've played on this network, the Winning Poker Network. America's Card Room is the skin, as they call it, that most Americans will play on. You can deposit and withdraw via Bitcoin. I have done that. Deposited and withdrawn via Bitcoin in the past on this site. I've won packages to go play in a tournament in, I think it was Costa Rica or Dominican Republic, pre-COVID. We'll be back to those days. But interesting, in the days of Bitcoin, and I mentioned this to Tom, when you're depositing and withdrawing over the last 8-9 years, I know stories, folks, from being around online poker. It's pretty cool. A lot of risk, right? You're playing a game that's an unregulated business, right? This company, if they go BK, you have money with them, that money disappears. We all quantify certain levels of risk, right? But people who were playing, who were big winners, they were withdrawing all their money in Bitcoin. And this isn't what this article talks about, but I'm aware enough from being in the industry. And you have people all across the industry that made tens of millions of dollars because they were withdrawing Bitcoin in the hundreds as it made to 20,000. Stay tuned, folks. We'll be right back to finish up the show.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I got the chart of Williams-Sonoma up here. We had their numbers last night after the bell as well. Strong numbers. Grew digital sales at 49%. They beat on earnings, beat on revenue. You trade from about 100 to 108, where this stock has been strong stock down to 26, and you're going to open at 108. Pre-COVID, you're dealing with about 74. All right, jumping back to that article because I was rushed a little bit, and it's pretty cool when you get into it. I just pulled up the price of Bitcoin because what happened is, if people recall, PokerStars and Full Tilt, if you have any aware, they disappeared from the U.S. industry in April 15th of 2011, tax day. And that is where this void got created for a company like Winning Poker Network, which operates sites including americascardroom.eu. They're in Costa Rica. They process everything for Americans in Bitcoin. So it's very difficult for the U.S. to clamp down on online poker, which they claim is legal. It's a skill game, folks. You're supposed to be able to gamble on skill games. Poker is a game of skill, period. Bitcoin, so what I want to talk about, you go back to just 2015, you're talking about $260. You go back to April of 2015. We all know this, right? But I'm just showing you how, because of how this went. Let's say you have people on this site who are already prone to risk-reward analysis, taking risks with money, which is keeping a substantial amount of your money in Bitcoin back in these days was a very big risk. But players were withdrawing money in Bitcoins at 200, 300 very consistently for years almost, okay? And a lot of these people, now online poker lends itself to people who are gamblers. There's a lot of young people in that, a lot of young men in particular, not a lot of cost, some of them even living at home, right? As in, it's not like you have families. They were able to keep a lot of that money in Bitcoin. Folks, if you just put $100,000 into Bitcoin, which when you're gambling, a lot of these players on these big poker sites are gambling tens of thousands of dollars. If you put $100,000 into Bitcoin back in when it was at $200, at $20,000, that's worth $10 million. And there's even bigger players out there. So there were some amazing stories of some of these, I say kids now, people my age, that were in that industry and forced to do business via Bitcoin. And as a result, they benefited 100-fold. Stay tuned, folks. We got our man Larry Pesavento. He's coming up next for